Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for June 26, 2020. I am actually re-recording this video in its entirety. Unfortunately, the first try completely failed, but we have to, show must go on, right? Anyways, stocks end the week slightly lower, but not terribly lower, I guess. They're still trading next to records. NASDAQ actually made another record and just pulled back slightly. We will look at communication services sector, its symbol XLC, and some of the big components of them have Facebook, Google, and Twitter. And then we'll look at how to reverse your thinking and how to potentially short stocks. So, for example, Boeing and AMC Entertainment. I'll give you examples of what does it look like to reverse your thinking and start shorting stocks. So treasuries, junk debt is still, approaching the support level, and treasuries actually moved higher because of the increased fear, I think. Natural gas collapsed to 20+ year low. I wish I had my old short position open, but you can never know. And then dollars at resistance. I'll show you a trade for euro versus US dollar. Nice 147 pips gain. And gold continued to multi-year highs, approaching all-time highs, and I got stopped out of my Bitcoin trade. Alright, so S&P 500, this is S&P 500 E-mini futures. So first of all, the lines in this chart, so I'm showing you this green, blue, red, and yellow lines. What are they? So these lines are mathematically calculated. They're support resistance lines, and they're called, this is an indicator overlay, so it's called MasterChartsTrading.com. It's my proprietary indicator, and you also can have the same indicator on your chart. All you have to do is go to MasterChartsTrading.com, click on Buy Alerts and Indicators, and sign up. Once you sign up, I will open the door for you on TradingView.com. This is the interface, the TradingView.com interface. Alright, so what are we looking at in this chart? This chart is clearly bullish in my opinion. I think it will continue higher. So here on this chart we can see a couple of upward facing arrows. These are actual alerts, and this was a successful trade. If you open, for example, on the 29th of April, I will just held, and then 18th of May you could have also opened, and this is a successful trade, obviously. So you could have taken profits here, for example, and possibly exited the position. Another opportunity right there on 15th of June to buy, not to short. So we're only looking to buy right now because I think the stock market is in an uptrend. So we are looking for opportunities on the upside. What do these lines mean? These lines indicate what's called a concept of support and resistance. So in trading, support and resistance is quite important because you can foretell what is going to happen. So if the price is above a certain level, so for example in this case the price is above this blue line, that means we're going to say that it is going to act as support because the price is above it. So what I'm seeing right now is price is kind of coming down towards support. The support is currently at 2938. It used to be resistance. So you can see back here in March this pretty nasty collapse, and then a big rally. And then on the 29th of April, right there where I'm hovering, the resistance that was acting, this line was acting, was overcome, and we're seeing a push towards new records. New records are not that far away, so I think we will see new records probably soon. Here's Dow Jones, Dow Jones Industrial Average. So pretty much the same general principle. It was lagging the S&P 500 a little bit, but For example, here is an opportunity on 27th of May, and it was successful, definitely a successful trade. A couple more alerts, one actually yesterday on the 25th of June. But today I'm seeing significant selling, so overall there is a possibility that the support has been broken. If the support has been broken, then we will see most likely a move towards 22471. It's by far it's not a guarantee, and I'm not predicting anything. I'm looking at this chart from a point of view of a uptrend. I'm not looking on this chart from point of view of looking for opportunity to short. So Dow Jones, S&P, I think also are in an uptrend. And looking at NASDAQ, QQQ, I mean, it's unequivocally in a bull trend, in an uptrend. The new all-time record highs simply do not happen in a downtrending bearish market. So this is clearly a bullish setup, a bullish market right there. This is an actual alert again on the 14th of April right there. This was good for 18%, over 18% gain. So if you did open, congratulations, and if you haven't yet signed up at MasterCharts Trading, do sign up. We are seeing significant selling. You can see big selling here in the one sector, XLC. This is communication services sector. So I was kind of interested to see what was the composition of the XLC, and I'll show you in a couple of minutes some of the big names in this ETF. But even this one, you can see right there on the 7th of May and also on the 15th of May, these are actual alerts. And you should have been able to make good money here, especially if you're trading options. A move from 51 to 56 it's a very nice move, so you could have made good money here trading options especially. But even if you don't trade options, you can just buy it, and there's a nice move right there. So let's see what was the composition of XLC. So one of the stocks is Twitter. Twitter was under pressure today, nice big drop, 7.4%. Notice where it dropped below the red line. So what does that mean? This means caution. Caution means if I had a position, and I actually did send an alert right there on the 8th of June. So if you opened here, then I would be thinking, okay, so maybe I was wrong. Where would I be definitely wrong? I would definitely be wrong at the yellow line. So for Twitter, that would mean another, few percentage points down. So like, let me see, what is it now? Another 15% or so down, and in that case, it will be definitely in a bear market. And additionally, this yellow line would act as a as a stop. So if I entered, for example, here on 8th of June on breakout, then this is my stop. Another significant stock that was under pressure is Facebook. You can see a big red candle, 8.3% drop. However, this was after almost over 25% gain from the recent alert, our recent alert right there on 29th of April, good for 26% gain almost. So if you were trading options again, or even if you weren't trading options, this is a very nice gain, and you should have been able to make good money. So Facebook, Twitter under pressure, Google also big drop, 5.4%, and yet again this was following a winning trade. Again, if you were able to get in, for example, here on 29th of April or on the 14th of May, this is a 9% move in your favor. So once again, if you're trading options, this is a sweet move, and you should have been able to get in and to get out. We're traders. We're not really, sitting there in the positions for years on end, although sometimes we do. For example, QQQ, the NASDAQ, the previous alert was actually a long time ago. So here you can see my previous alert for NASDAQ. They don't come up that often, so there's the alert right there on the 4th of June 2019, and we would have exited on the 26th of February of this year without any kind of insider trading or anything of that nature. Alright, so this is XLC, the communication services. Now I am getting significant amount of questions about what do we do when the stock market turns around, and when it turns around, that means we're in a bear market. We're not currently in a bear market, but I do want to give you an example of how to think in terms of bear markets. This is Boeing on daily time frame, obviously. So this market route here in March was not the beginning of the bear market for Boeing. We need to go back some more, and there is the beginning of the bear market where I'm hovering on the 26th of December. So this is where I would say, okay, if I had any positions where I bought Boeing, I would be exiting them by now. So how do we short? How do we think about selling? So we need to have a security which is downtrending, and in this case it's clearly downtrending security because it continuously hit new 52-week lows. If you're using my indicators, and hopefully you are, all you need to know is that it closed below this yellow line where I'm hovering, 26th of December, right there, and then from there on you want to look for shorting opportunities. Now the best kind of opportunities, in my opinion, is when the price has broken below the yellow line and then came back up towards the red line. Unfortunately, here on the February it did not come far enough, so we were not shorting it here. But this right there is an opportunity. So if you were trading it, if you had my indicators right there on the 16th of June, a few days ago, last week or so, this is an opportunity to sell Boeing, to short it. You can also buy puts if you are able to trade options. If you are able to trade options, that's a 14% gain in your favor. If you bought puts, so that could easily have been like 30% gain, because options move significantly more than the stock itself. But this is what I'm trying to tell you, is that you need to reverse our thinking. If before we were buying on a pullback towards the blue line, now we're selling on a rip. So this is a rip higher, so we're going to sell the rip. The stock rips higher, we're going to sell it right there. And this is why I like my indicators, is that it's pretty obvious where, at what level to sell. So in this case you would have been right there on the 16th of June, pretty obvious. Another interesting stock, I think one of my subscribers mentioned this to me. I don't really trade this, but it's AMC Entertainment. I think it's a movie theater chain. Now, of course, back in March, pretty much, the entire stock market got hammered. But notice that AMC was downtrending for a long time, and we need to go back significantly, far further back to find the beginning of a bear market. And there it is where I'm hovering. The beginning of a bear market for AMC Entertainment was on the 19th of November 2018. See how accurate it is? You don't need to guess. Is this the bear security or bullish security? No idea. I can also turn off the indicators and I'll show you what I mean. See how difficult it is to read? But if you turn them back on, you can clearly see where it is. So there's the breakdown below the yellow line. And now what we're looking for a move towards the red line, a rip higher. So if we were trading it back in 2019, this would have been just killer opportunities to sell it, to short. you would have been probably able to retire if you bought puts here, because look how much they collapsed. The stock went from 16 to 2. Yeah, big drop, enormous. But if you didn't catch it, it's okay, because there is another opportunity. And there were the opportunities, one on the 11th of May, another one right there on the 16th of June, and then the latest one right there on the 19th of June. So already successful. So let's say you shorted it right there on the 19th of June. This is 27% move. You know, it was almost 550 or so, and now it's 370. So yeah, huge drop. So if you bought puts here, then you would have been already, you know, very nice gain right there. So this is what I'm trying to tell you. You need to reverse your thinking for the bear markets. To help you with the reversal of the thinking, I would highly recommend you apply my indicators. And once again, you can find out more about them at MasterChartsTrading.com, because they will help you exactly. They will show you exactly where to buy and where to sell. Junk bonds. So junk bonds are, why do I continuously cover them? Why do I continuously worry about them? They're an important part of the market. They are more related to stocks, because junk bonds, they are by definition that they're very low quality bonds, and low quality bonds are basically stocks, and they trade like that. Now, a few months ago, Federal Reserve came out and said that they're going to start buying junk bonds. In fact, they came out and said that they will be buying this particular ETF, JNK. So we were not really, you know, I don't normally listen to news, or let me rephrase it, I don't normally let the news influence my trading behavior. I solely trade on the charts. So for example, if this was in a vacuum and I didn't know anything about the Federal Reserve, I would have still bought it right there on the 9th of April. And in fact, I bought some for my retirement accounts right there on the 22nd of May. Now, right now it's coming down towards support. So the support is about 100, at about 100. And let's see if the Federal Reserve starts buying, or if, you know, investors start buying as well. If it comes down towards the blue line right there, towards about 100, starts bottoming here and then rallies. So what I want to see is, I want to see a drop below the blue line. So for example, like we were here in May, and then a close above it. That's all I need to know. This is why I like my indicators. It's so simple. You can just trade without really knowing much about any security, which is actually a lot helpful. You do not need to read the news. I would highly recommend you don't when you trade. Here's TLT treasuries. I actually bought it right there on the 11th of June. I bought TLT at 162.87. Why? Because, like I said, all I need to know is, did the security drop below the blue line? Yes. Did it make at least a low below it? And then did it close above it? Yes. So it closed above the blue line on 11th of June. I bought it right there. I'm sitting in the position right now. Let's see if it's going to continue higher. My target is about like 170 or so. So treasuries actually represent more. It's kind of like a fear gauge. So if investors are buying treasuries, that usually indicates there is more fear in the markets. Does it mean that's happening right now? It's possible. It also could mean that treasuries are simply going up, not because of the fear, but just because they're going up. So that's why I'm, buying them myself. I bought them recently myself for my trading account and for my retirement account. Here's a trade that I sometimes beat myself up. I did take a trade right there. So this is exactly what I was just talking about. When you are shorting, you need to sell the rips. So this is natural gas. Natural gas was trading at new lows here back in March, then all of a sudden kind of continued higher. This is my trigger right there. So we had a high above the red line right there on the 5th of May, and then a close below it on the 6th of May. I did not question anything. I just went ahead and I bought puts on UNG right there on the 6th of May. The trade went again, immediately in my favor. I sold half a few days later, and then a few days later I closed my position. Now I'm beating myself up because I closed it way too early, because now you can see natural gas collapsed to new lows. These are like 25-year lows. Yeah, so the point is, hold on for longer periods of time. The longer you hold the stock, or in this case, the longer you hold the position, generally speaking, the better the results. Excuse me. The better the results. All right. Dollar index, DXY. So you can't really trade it in the United States, but it's a useful gauge, so we should be looking at it as well. I think it entered the bear market on the 2nd of June. Now for Forex, I use the blue and the red lines to set my trends. For stocks, I'm okay for the stock to continue to even the yellow line. So dollar index DXY, I think entered the bear market. Notice how interesting that it bounced off the yellow line right there on the 10th of June. So these lines actually mean something. So these are indeed support and resistance lines that are useful and meaningful. So what are we thinking? We're thinking the dollar index is in a bear market. In other words, we should be shorting the dollar. So here's euro versus US dollar. If we're thinking that we should be shorting the dollar, then we should be going long. We should be buying euro. In fact, this is what we did. There is an opportunity on the 2nd of June, nice big gain, and another opportunity right there where I'm hovering on 19th of June, also a sweet 147 pips gain. So if you trade Forex, you know it's a nice gain. And by now you should have been out of the trade. So you enter, get your target, take your profits, close your position. Now with Forex, I think you should be quite nimble and get in, get out as soon as possible. Don't stay in the market for too long. Again, if you need these indicators, find out more about them at MasterChartsTrading.com. Alright, and then gold. So as euro is gaining, dollar is dropping, gold is gaining in price. Why is it happening? Because you can see it's XAU USD. So gold divided by US dollar. So if US dollar, the bottom part of this equation, is getting weaker, that means gold, XAU, the top part of this equation, should be getting stronger. And this is exactly what's happening. Although of late, the correlation has been not as clear cut. So overall, gold, wonderful position. I have actually my position as well, GLD. I bought it on the 23rd of March right there. It's up 14%. I really can't complain. I have some gold related as well, some gold miners as well. But overall, gold seems to be heading higher for whatever reason. Obviously, there is unrest, there is fear, there's all kinds of things happening out there, and gold is gaining as a result, or perhaps just because of the technical picture. Again, I don't really want to get into the reasons of why things are happening. We're technical traders, so we only look at the technical picture. And Bitcoin, so I had a position in Bitcoin and I bought it 88.52 here. Got stopped out, unfortunately. I mean, it still looks quite bullish, but I was hoping that, like, for example, this candle right there on the 1st of June, I thought we were just gonna go to like 15,000. That clearly didn't happen, so let's wait and see. A pullback towards like 8,000 would be just awesome, and if it does pull back towards this level, then we can start buying there as well. Alright, so we're getting close to the end. Head over to MasterChartsTrading.com, click on Buy Alerts and Indicators. Now you can sign up for either newsletter, the trading indicators, or the ultimate package. Obviously I recommend the ultimate package. The reason being is because not only you get your own trading indicators for TradingView.com. This is TradingView.com interface. TradingView.com interface is free. All you have to do is sign up on my site, MasterCharts Trading. So the ultimate package is much better than separate, because you will not only get the indicators to trade on your own, you will also get tons of examples. I send many examples daily. I call them alerts. So do sign up. The price is, I think it's a great price right now, and actually yearly subscription is even better price, $38 per month, billed annually at $459. So overall, I would, not hesitate. If I had if I have not invented my indicators myself, I would have signed up for them now. Alright, so that's it for this week's recap. If you have any questions, please send them in. Thanks for watching. Have another great trading week. Bye bye.